Well, an absolutely wild day. It is the first trading day of the month, Thursday, August 1st. We do have another very volatile session, another expansion move from the index. You can take a look at the action from today's regular trading hour session. Price completely filling yesterday's gap here on ES. Take a look at that. Almost perfectly to the tick. Look at today's low. Look at where the gap, or rather Tuesday's session closed. That's pretty much right to the tick. Perfect gap fill on ES. So we came into today's session, and one of the things that I was concerned about was price's location. We had two very strong kind of counteracting forces here. One of them being the near-term range breakout, which pushed up into 5590 area, just shy of that 5600, that 5610 area. But then we have this area of resistance and last week's volume point of control. That's what I was talking about this morning. This area definitely was going to be problematic for price. We did have some pretty nice action in that first 30 minutes for long opportunities. You get the test of the resistance zone almost perfectly to the tick, right? Take a look at that right through there. There's that 1 hour chart. And 10 a.m. reversal time rolls around, marks the session high, and it's just a sell-off from there. Not a lot of areas of support to potentially catch this move. Once price is starting to push into that volume void, this open gap, it's going to be very hard to stop it. And that was part of what helped this move for today. We were looking at potentially 55.30, obviously not a single bid there. And so once you start to see that 55.30 really failing, not only was that the prior near-term range breakout point, but it's also yesterday's low with an unfilled gap below. You either need to be getting short right away as best you can with an entry, waiting for some next lower high to materialize, or, you know, if you're thinking about grabbing some type of long, this is not the time to do it, right? This is, once price fails this 55.30, it's signaling that the breakout failed. The breakout up through 55.30 failed, and you have this massive unfilled gap here. So it's a good recipe for continued lower prices. A lot of opportunity through here if you're still trading at this time, getting involved with either the 55.30 area or down through here in this 5500 area. Some good ops there for continued downside exposure. Where do we go from here? Let's take a look and zoom out again on the current setup. Take a look at that 60-minute. So price is just back down into that near-term support zone. Just back down into that near-term range low. Nothing all that new here, frankly. We've been trading against this support zone for about a week now, since essentially last Thursday. And so the main watch for tomorrow is pretty simple. We want to see how price is going to be trading versus this 54.50 and 54.35 downside levels of interest. Key support zone. Key support zone right through here. So that's the current setup. It is possible that what we see develop here is a much, much wider range. That is one possibility. It is possible that price gives another leg lower, right? And so that either of those scenarios are going to hinge on how price responds to this area right through here. And so that'll be the focal point for tomorrow. Overall, we continue to see price trade incredibly technically despite elevated volatility, right? It's respecting the levels. We have really good market structure. So that is always encouraging to see, especially with this test and reject of that 5600 area. So we'll see what type of buying activity we get versus that near-term range low for tomorrow. Hopefully it's not a situation like we had yesterday morning where we're waking up to a huge gap higher. Now, we do have, if I'm not mistaken, we do have Apple and Amazon earnings after the close, which will definitely be market moving. So another gap is a possibility. I wouldn't be surprised by that tomorrow. Apple's definitely has enough market cap, market weighting here in ES to be pushing this thing around. So main focus, just to simplify, right? Cut out all the noise, keep it simple. Remember, only price pays, and we'll be looking at the response versus this area. Let's jump over to NQ. So NQ, fairly similar, right? Price trading up into that 19,650 level of interest this morning. That was the prior area of support. I was more so looking for a continuation move up through the overnight high, and I was certainly not expecting a move of this magnitude, that's for sure. That was definitely clear in my commentary this morning, expecting a much slower session. Retracement was definitely something we discussed, but 100% retracement was not within my expectations for today, that's for sure. So we end up seeing pretty much 100% retracement of yesterday's move, including that overnight action. Rejection of this key area right through here. Again, like I said, prior support then becomes resistance. Price does not even visit this area like it did on ES. Remember, ES is trading up into last week's volume point of control, that key structure point. Not the case on NQ. NQ definitely the weaker of the two, continues to be weaker. And we see that again today. So taking a look at that same gap, not quite 100% filled, but just about. This is what I was talking about when I made that post in the main chat this morning. Below prior day low, remember. Big unfilled gap, and you have a volume void through these areas. Price tends to fill those areas quickly. Not quite a complete fill today, but I think you can call that close enough. Pretty much, it's like 90% of the gap there. So for now, what we want to see is essentially how price is going to be trading versus the lower portion of this structure. You have 18,875 as a downside level of interest that we've been watching for the past week or so. And then we have the 18,750, which will be significant because it is this week's low. So price near a key pivot in the near term definitely makes it easier for us. We like to trade against the edges of these ranges, of these near-term ranges. So we'll see again how this overnight action is looking with Apple and with Amazon earnings. Hopefully we're not looking at too large of a gap, but that is within the realm of possibilities. So take a look at this, a true 2 ATR move today. Normal ATR, and the ATR is definitely expanding, but normal ATR is 422 here on NQ. 850 point move on NQ. ES, normal ATR is 78. Wow, not too long ago, the ATR was like 40. So we're definitely seeing some range expansion, some ATR expansion there. It's a product of volatility. But 78 ATR, 156 point move. Wild. A lot of opportunities, but with those wider volatility moves, risk can increase pretty easily, simply because when you're leaning, if you're like me and you lean on market structure, you lean on signal bars, things like that, those risk points, those signal bars, those structure points tend to be much, much wider. So just make sure you're paying attention. Maybe worthwhile to drop the contract size a little bit, but definitely have that awareness, especially if you're more used to that lower volatility regime. All right, that's the recap. Main focus for tomorrow, near-term range low, pretty straightforward. See if buyers continue to be responsive versus this zone or not. take it from there. Hope everyone had a good sesh. If you guys have questions about anything. Oh, one other note. I will be live on YouTube tomorrow morning, live streaming the first 90 minutes or so of the session. That'll be analysis, commentary, and potentially some trading. Try and keep it focused. No nonsense. Just ES and NQ commentary. So I'll post the link in the main chat if you want to catch that. And yeah, see you guys there. Have a good afternoon.